Welcome back, everyone, to another one-on-one with Jerry Hall. Today's conversation is with Mr. Shahar Abrams, incredibly insightful young man. I found Shahar on Twitter. He's really focus-driven to financial literacy, and he has a tremendous amount of experience and knowledge around the digital asset space. I think you're going to find this conversation extremely enjoyable and interesting because it combines the best of understanding the innovation that is blockchain with the investor mindset, i.e., how do we profit from this? How do we obtain wealth and then preserve it? That conversation's coming up right now. So Shahar, got you on the show. I have a lot to go over with you, but let's first just quickly, for the audience that isn't following you on Twitter, who's Shahar?
Who am I? Well, let's see. I have a bit of an atypical background, I guess you could say. I was born in Ohio, moved to Israel. My earliest memories are actually from Israel. And then from Israel, we moved back to the States, and I grew up in Alabama. So I was one of the few, probably the only person named Shahar you can find in Alabama for my early life. And then I moved to DC for college. I stayed there for work. I got hired at IBM in 2014, just when I graduated, and was doing analytics work for them, basic stuff like that. And the real sea change moment for me probably came in 2017 when like many other people, I kind of learned I learned about crypto. And for me, the moment was I had bought this book. And the book was by this guy called William Mugayer. It's called Blockchain for Business. And I bought it as kind of like, oh, let me brush up, on new technology as part of my job. And I remember, I boarded a plane. I was flying back to Alabama. And I, opened up the book on the plane. And by the time the plane landed, I knew that this is what I wanted to spend, my life on. Is blockchain technology and crypto. I immediately started, investing. I started, I went down the rabbit hole. I was just trying to learn as much as I could. And of course, and I got in at like mid 2017. So my timing was pretty good, just sheer luck. So I did very well in 2017, as, everyone that, had crypto at that time did. But I didn't know what I was doing. I had no experience in markets. I had no experience, charting or really investing. It was my first time really like actively investing in something I cared about. So I lost it all, in 2018 and 19. But, I went back to work, right? And I kept learning. I learned more about markets. It's a pretty big motivator, when you lose, you make something like six figures and it's like life-changing money for you, and then you lose it all the next year. Big motivator to kind of get to work and not have it happen again, right? So during that time, I started working at IBM Blockchain. So IBM was standing up our federal blockchain consulting practice, and I ended up joining that in late 2018. Another in hindsight, what was a big moment in 2018 is I went to a conference that IBM actually sent me to. And at this conference, I met Alex Mashinsky, the founder of Celcius Network. And he was giving one of his first the app had just launched. This was in like October 18. So it was well after the ICO. I didn't know about it at all. And I saw him give one of the earliest, presentations on MOIP and, Celcius and what they were building, right? And I, found him afterward. It was very interesting, right? He was talking about earning crazy yield, on crypto. So I found him, afterward and started talking to him, and, asking him all these questions about, how the hell are you doing this and what's the catch and all this stuff, right? And he answered all my questions, right? And he was very patient. And so that's when I learned about Celcius Network, and I started, investing in them. I actually would meet Alex again later that month at another conference, and I got to meet kind of more of the Celcius team then, and that just kind of built my conviction. So that's been the past few years for me as I was working in enterprise blockchain, trying to build, these systems and take advantage, of the distributed ledger concept to augment, business processes, specifically in government. So one thing we did that I can talk about, I can't go too deep into, but, we were building a blockchain based system for the US Postal Service to help them track international mail. Right. So the Postal Service is someone mailing out packages to, every country in the world. Right. And they don't have their own planes. Right. A lot of people don't realize that they're not like FedEx or UPS. They don't have planes. Right. So they contract that out. They hire, the airlines and UPS, et cetera, to take that mail for them. So there's a large chain of custody, for mail getting handed off to different parties. And so it's a great use case for something like blockchain. So that was, something I worked on for a while. And in the meantime, I was, kind of perfecting my, ability to kind of not necessarily trade, but, invest in crypto and learning about different projects. And, and 2020 was a big payoff there. Since March, obviously we had the massive scare in March where everything, tanked and we thought it was the end of the world. But you had conviction, right? You held on, and the payoff's been really great. And so I had the opportunity, middle of last year, I was able to make the decision that I wanted to work on something on my own. I wanted to get more into education. I worked with education nonprofits when I lived in DC for many years. Always been really interested in education. I always knew I liked to teach. I teach, one thing I've done with nonprofits is teach piano. You see the piano in the back. I had my lessons on that yesterday, taught my 2 students. And so what I'm working on now, I quit IBM. It was a tough decision. But I wanted to start this business around helping educate and, onboard people into the new financial system that's being built, right, in crypto, and the incredible tools that we have. Celcius Network is a good example of one, right, where you have access to, this ability to gain, get passive income, right? The secret to wealth is passive income, as you probably know. And never before in history has it been easier for anyone, no matter how much you have to invest, right, to participate in this type of passive income investing strategy. So that's kind of what my business is called Road to Babylon. We're going to launch soon. And, I just focused on teaching everything from the basic, financial education concepts on how to save, how to invest, how to budget, that kind of stuff, all the way into, deep crypto investment stuff, how to value crypto projects, how to go about investing in them, how to form a portfolio, allocate, sensibly, between different crypto assets, and then use the tools available like CeFi and DeFi, right, to maximize passive income and yield and ultimately reach your financial goals.
And hence why I was adamant about reaching out to you. We have very similar paths, different backgrounds, but very similar paths. I too, when I came in the January of 2018, obviously the big bull run had happened, and I got to experience a dollar cost average strategy into this asset class while it was going down, and I felt really great about that. But then it stayed down for 2.5 years.
For a while.
And that was tough. But I'll tell you, one of the incredible things that came from it was, for me, my deep dive into crypto was really just the beginning of a deep dive into financial literacy, right? Understanding monetary systems, understanding economies, understanding governmental monetary policy, and then, of course, trying to frame this through a macroeconomic type lens. It really gave me some insights, and I'll tell you, I'm glad that I'm kind of grateful for that 2.5 years of pain and agony, because it really forced me to learn, right? And it's through that learning, like for instance, real briefly, I have what I believe is a pretty common investment strategy in digital assets. I don't own an asset that won't pay me to own it, right? So I won't invest in an asset that I can't park on Celcius or Nexo, or it isn't part of a proof of stake protocol that generates its own return on asset inside the protocol itself through delegation, what have you. Now, there are folks that'll tell me, Jerry, you're missing some stuff, right? There are some absolute gems out there. And you know what? I believe that there are some absolute gems out there. But I honestly believe in the sound principle of my assets should pay me to own them. And if there's an asset that's an absolute gem and I can't find a platform or a mechanism to earn a yield on it, there are so many that do. Why would I miss the opportunity costs on the assets that do offer me that additional, what you would call passive income stream? Right. And when you're reinvesting it, right, you're not taking it off the table. You're actually getting to take advantage of the most powerful financial principle on the planet in the history of finance, and that is compounding interest. Mm-hmm. All right. So when reading and following you on Twitter, I was like, I've got to get Shahar on. I want to start talking to Shahar in full transparency. Part of this is a ruse. The show is wonderful, and a lot of people are going to get a lot from our conversation. But this was a way for me to reach out and to develop a relationship with you. I too want to teach. I too want to educate and do. And I have ideas. Like, I'm working on a pet project. I call it Money Monkeys, and it's all about financial literacy for 7 to 14-year-olds through a process of telling stories that convey the principles. Because the truth is, Shahar, as well educated as you are, you didn't get financial literacy courses in college. You didn't get investing in college.
Absolutely.
And the truth of the matter is,
I went to business school.
Yeah, exactly. Well, so yes, same here. Here's the thing. For years and years and years, generations before ours had opportunities to park their money in what they would call safe haven, safe bet, yield creating vehicles, specifically government bonds. Now, with debt cycles being as they are, with the creation of debt seeming to be the only way to create any kind of growth in the economy, it's definitely not productivity driving growth anymore, it's debt. Well, that's eroded the ability for safe yield. Now, crypto is starting to turn that on its head. It's still early days, and I'm not going to predict a 20-year run in quote unquote CFI or DeFi. I don't know, but it sure is wonderful that that is coming back, because I can distinctly remember my grandfather died when I was 6. This was 1974, right? 1972. And my grandfather died. And my grandmother is now left with a little nest egg. But how is she going to support herself, right? She gets a little stipend from the pension that my grandfather was almost going to take. She got into bond investing. And I remember she used to talk to me about bonds. She would say, You should put half of your money into these bonds and they will pay you over the course of years. She was a big 10-year bond lady, 10-year bond, 10-year bond, 10-year bond. Well, back in the day, she could actually derive a $50,000 a year income
Right.
off of a $500,000 in bonds.
Yeah, it used to be possible.
Try to do that now.
Yeah.
You know, I mean, what would $500,000 in 10-year bonds gain you now? What, you get $100 a year?
Yeah, I don't even. I mean, they're going negative.
Disgusting.
Almost like you gotta. Yeah, I totally agree with you. I mean, and it's you know, it's a sense of where we are now, right? And you know, it's a search for yield, right? And we're seeing it play out in real time, like with the news that happened yesterday, right? Companies now, if you're a company, right, you can no longer, your cash is almost worthless. The market literally doesn't value it, because what are you going to do? Buy bonds? You're not going to earn anything.
It's not just a zero, it's a negative.
Right. Exactly. So it's burning a hole in your pocket, but you can't really do anything with, you know, you can't buy bonds. So, you know, people are looking at other options, and I think what happened yesterday, you know, with the Tesla announcement, putting, you know, $1.5 billion of their corporate treasury into Bitcoin, which, by the way, you know, is a 100-year plus position, right? You think about them buying that Bitcoin, right? They're not looking to make a quick buck, right? They're buying it for hundreds of years, perhaps. Okay. You know, it was kind of a surreal moment. You know, I don't know if you kind of felt that way too, but going back to 2017 and 2018, right, when people talked about, oh, one day, you know, companies are going to hold Bitcoin in their treasuries, right? It seemed like a pipe dream. It seemed like, you know, wow, well, you know, that makes sense, but you just don't see it happening. Like, you couldn't comprehend it. And just 2.5 years later, we have one of the biggest companies, you know, putting $1.5 billion on their balance sheet, right? And more are going to come. But it all stems from kind of the point you were making, right? There, you can no longer just buy bonds. You can no longer just park your money in bonds. There's a search for yield, and crypto, the whole ecosystem is rising kind of as a direct response to that. It's like an immune system response of the economy, you know, like the people, you know, literally were like, all right, what are the biggest problems we have today? Okay, security, trust, yield. All right, let's solve all of those problems in one kind of industry, right? And that's what's so incredible about. I mean, I am amazed every day, you know, how much I still am learning about this space and how much work is still going on, you know, and I keep, you know, one frankly advantage that I have, right, is that I worked in the industry, right, and so I have industry friends, right, and industry groups, chat groups, kind of, you know, tell where I get a lot of, you know, information from, and where I have a direct view into what is getting built, right, and what are people getting excited about, what is going on, right, and so and what I see, Jerry, is just, you know, there's so much happening, you know, it's still. It's thriving. The DeFi ecosystem is thriving. Ethereum is thriving. We have digital art markets now on Ethereum. I bought a hash mask the other day. I bought my first piece of digital art. I'm getting it printed. I'm super excited. And it's just, it's amazing. It's so exciting. And
I think that is so cool. Good for you. Good for you.
What'd you say?
I said, good for you. I think that's great. You know, I'm coming at this from, okay, so I'm 55 years old, and I distinctly remember, this is obviously in the 80s, as I'm a young man and really, I would say kind of, you know, really cementing a world view, like the way I view the world. That really happens for most people from around that 15, 16 year up into their early 20s is kind of like when they're really forming their view of the world, right?
Yeah. And I can just, it was like, yeah, early 20s. Yeah.
Yeah. I mean, that's a very common thing, um, and regardless of culture. And I so distinctly remember that, okay, here is this. I remember the onset of computers, and they were really only in universities, but I remember hearing about them and what their computational power and how powerful they were for doing so many, like, mathematical type problems. I never thought too much about it because I didn't see how it related to me really. And then I distinctly remember the IBM slash Apple PC, I don't want to say war, competition, right? In small personal computers, right? This evolutionary thing. And this is the same time that small Atari Pong video games were coming out. And you could see there was technology coming to the forefront that was going to change some things, right? These games were going to change home entertainment. These machines that they were building were going to change the way people did work, right?
Mhm.
But I never thought about investing in it. Okay, great. So I see that happen. Then I see this communication technology wave come, and it started off with these little devices you could wear on your hip. They were called pagers, and somebody from a landline could tap in a number,
Yeah, I remember those.
reach your pager, and using numbers create little words like hello or sit, there was little codes. 911 meant emergency, call me, et cetera, so what I mean. And then that evolved into these like analog wave devices, these big bulky cell phones. And I saw that coming, and I thought to myself, that's really Marvel. I think that's really cool. Never put a dollar into anything. Then the internet came in the early 90s. And you could actually in your home plug in to a telephone line and access other people doing stuff.
They would
Right?
dial up. Yeah.
And I remember that so distinctly. And I thought, boy, this is the greatest thing in the world. I can play pinochle with people all over the planet. I thought that was the greatest thing in the world from the comfort of my own chair, right? I never thought about the investment opportunities of it, but I always remember watching those three big waves of technology that permeated all parts of the globe, all cultures, all businesses. When I saw crypto, and not from a price appreciation standpoint, but from a what it could do standpoint, right? Having had experience in business where I had to purchase products from Ecuador, hardwoods. I was in construction, and so a lot of the custom stuff I would do would require very specific materials that had to be outsourced from outside the United States. If I couldn't get a local United States distributor to do it, I had to do it myself. Sending money around the world is expensive and scary because there are times where you don't know where your money is and nobody can tell you where it is.
Right.
Right. But I find blockchain, and here they are, companies like Ripple are in their XRP ledger and their products. They're saying, hey, we can do this with finality in 3 seconds. Done. Oh, that's interesting. Bitcoin, we've created the perfect gold in digital form. Perfect. Smart contracts. We can create programmable money and mirror business contracts that are transparent, immutable, final, and undisputable. Wow. I mean, it's like, okay, I'm not missing this one.
Yeah.
So
So
I went all in. I'm all in.
So what was different? So Jerry, what do you think was different this time? It sounds like each time, you saw each of these kind of technological waves, and it seems like each time you felt it. You knew somewhere that it was going to be big. It was going to really have an impact, right? So what was it this time where you decided to, put skin in the game, right? Put money into it? Was it just kind of a function of your financial situation that you were just ready, or was it something, did you feel differently about it? Did something change in your thinking, some experience that you had?
Yes, actually. So in 2015, my son moved out. I was a single father for his whole life. Pardon my beautiful rescue dog there. She's alerting me that neighbors are walking by. My son moved out and I'm sitting here in this 4-bedroom place, right? We got a couple motorcycles in the garage. I've got I got my cool work truck and I got a cool car and, just a house full of stuff. And I remember so distinctly sitting on the edge of my bed one morning. This is a couple of days after Dylan had moved out, thinking to myself, what am I doing? I've got to generate $4,500 a month to cover just the stuff, the insurances and the payments and the this and the that's and the subscriptions and, just all the stuff. I realized that isn't what I wanted, right? I did it for years because I wanted a stable home for my son to grow up in. And you know what I mean? I wanted to provide for him what I didn't have for me.
Yeah, and that was taking up probably all your kind of mental space. You were just
right.
focused on that.
And the fact of the matter is, I've been so blessed my whole life that making money was never difficult for me. People always tend to kind of either really like me or dislike me, and more of them like me than dislike me. So, I could always paint a house or build a deck. And, I've had my license since I was 18. So I've been kind of on and off self-employed my whole life, developed some great relationships. And towards the end of my career, the last 15, 16 years, all my previous relationships kept, I had a property management company that fed me all of their work. I had a condominium complex that I did all of their refurbishment and maintenance work on. So finding work wasn't a problem. It was, matter of fact, it was scheduling and getting the right people and, managing it was the only job. So when all that happened, I went, I don't want to do this anymore. I sold all my stuff. I diverged myself of all the stuff, got down to about 300 pounds of actual personal belongings, paid off all my debt, and went and worked on organic farms in Hawaii. Right? Well, I kind of sorted things out.
Yeah.
But I realized that I didn't want to go back to the life that I had to earn money. And that what I had in resources in the bank was finite. Right? There's only so much in there, and I'm going to outlive it. So I better do something. Mm-hmm. Found crypto on a trip to Costa Rica when I was getting some eye surgery done. And in that rabbit, I just fell in love with the learning. I saw a way for me to prosper. I saw a way for me to create a vehicle for others to prosper. I think, for me, one of my particular philosophies is a tremendous amount of the strife that's on the global stage doesn't come from politics, doesn't come from religion. The truth of the matter is I think it comes from income inequality. And I believe that if people feel financially secure, all that other stuff kind of melts away, right? If I feel financially secure, I don't care if you're a Republican or a Democrat. I don't care if you're Jewish, Catholic, or Muslim. If I feel secure in where I am, I'm okay. I don't care what choices you make, right?
Yeah, I totally agree with you.
And so that's kind of been my driver, right? Financial literacy gives us the opportunity to at least be aware of the opportunities that are there. Not everybody is going to want to to invest the way I invest. Not everybody is going to want to do this or do that. But if they have at least the information at their fingertips, then it's their choice to utilize it or not. It's their choice to sacrifice or not, right? Because none of us are going to do well investing in crypto if we don't make sacrifices. You have to make sacrifices, right? You can choose to buy new cars, or you can choose to invest in Bitcoin. They're both going to have different outcomes, right?
Yourself today, or you can, take kind of the future orientation, and yeah, absolutely.
Yeah, so that's what I did, man. I moved to Costa Rica, I live on $350 a month while my crypto assets and all free cash flow goes into more assets.
Yeah.
And at some point, there'll be enough value in the portfolio that I will leverage the portfolio through lending platforms like Celcius and Exo. And I will buy property, and I will build my dream organic farm, and I will create my international learning center where people can come and learn finance or organic farming or Tai Chi or yoga or whatever, whatever I offer on the property to do those things. And until there's enough ample resources to do that, I am a hunker down and hodl kind of guy, right? Don't eat out much, and when I do, it costs me $1.50. Most of the, what I mean?
Well, that's pretty. That's pretty incredible.
I don't buy new shoes. I don't buy new clothes. I don't buy things that aren't necessary to the furthering of my journey to get to that destination. I call it the investor mindset, and I've learned it from guys like you. I learned it from the folks at Real Vision. I learned it through that incredible community on Twitter. Whether they know they're teaching me this or not, this is what I'm extracting from it, right? So basically, in a nutshell, crypto has taught me to delay gratification. Whereas before, I would just I'd make money and I'd spend money. And that's what the Reagan era trickle down economics taught me. Make it, spend it, be a good American and be a good consumer.
And that's what school teaches you too.
And I did a great job of it.
That in absence of everything you're talking about. It's not like they teach you both and then say, hey, and now you choose, the way you want to live. They just teach you the one thing.
Exactly. Be a good American is an American that will take on a tremendous amount of debt and work their ass off just to pay it off and stay afloat. That's a good American. I think that's BS.
No. Yeah, I mean, whether or not it's a good American, just is it good for you? Is that how you want to, is that how you want to go through life? Is that, is that the mindset you want to have? That, it's not helpful. And delay, the ability to delay gratification, by the way, goes into so much more, in life. Right. And that's one of the best things, you learn from investing, because all investing, not just crypto investing, but all investing is that practice, again, of trading off past to future, right? Of saying, well, I don't,
exactly.
I don't need, the nice thing now, or I don't need the extra thing now. I'd rather put that away and make that money work for me, right? And get a little bit more in the future, and a little bit more the day after that, a little bit more the day after that. And as you practice that, right, at first it seems very hard, or at first it seems, you don't even think about it, right? Like you said, you just don't, you're not taught to think that way. And then you start doing it a little bit, and it might be a little bit hard. But then after really just a couple months, or it's different for everyone, but not that much time, it starts to just become kind of second nature. And then you start to think, well, why wouldn't I do this? And then you can't imagine not doing it. Right. And then you see how much passive, income you're starting to generate. And then you're seeing what you're going to be able to do in the future. And now you have a plan, and now you don't have to worry about, as much about retiring and where, things are coming from. Having that plan, that just starts to feed into so many other things. And then you bring that mindset to other types of decisions, right? Education or relationships or things like this, where always, the ability to delay gratification, right? It's super useful just in life in general, I think.
Oh, absolutely. I can't tell you the date that the mind corrected, but it was sometime in mid 2018. The mind switched from everything I looked at that I had a relationship with value exchange. The little voice would go, is that depreciative or appreciative?
Or will it
Is it
compound?
going to appreciate or is it going to depreciate? Oh, okay. And what is the value for a little guy like me that didn't have much? I didn't come to this party with a lot of money, right? But I will tell you that taking the mindset of, whether it's 25 cents or $25, if it can go into an asset that's going to appreciate, and I can leverage that into a system like a Nexo or a Celcius or a BlockFi or whatever. And in full transparency, I have accounts with both Celcius and Nexo and love them both.
Great.
Getting to see the positive feedback loop in Celsius's case every Monday with my distribution of what assets were created for that week of lending them my assets, that gets a positive feedback loop, right?
Yeah.
And you do that for a while and you go, wow, this is pretty cool. But then something wonderful happens. And that is we get a little uptick in the crypto market. And then that uptick turns into maybe a little mini bull run. And you see the market cap explode. In over 8 months, we get $1 trillion of new market cap into crypto. And you look at your portfolio from, June to today, and you go, I haven't put any more money in there, but wow, look at how large this is.
Yeah.
That's
And
another
then the
part of
next
the
Monday
positive
rolls
feedback
around
loop.
and you get the even more, Yeah.
And you learn little things like how to break down. Look, I do a lot of work on, I have a spreadsheet that you can apply to Celsius, Nexo, BlockFi, any of those kind of things, where I can extrapolate out forward projected earnings. I can distinguish my tax rate if I want to take it as passive income or allow it to continue to compound or set up different parameters, loans, debt to equity ratio stuff. I got this really cool spreadsheet that I'm using as a tool because I honestly believe the path for me going forward is a path of leveraging assets, not selling assets for profit. Now, there's this debate in crypto, and that is you never get broke taking profits.
Yeah.
There's a tremendous amount of truth to that, but you never get filthy rich by selling assets that continue to appreciate. Anybody that bought Apple in 2011 or 2010 and sold it in 2016 made a lot of money, but they didn't make anywhere near the money of the people that are holding Apple stocks today if they would have bought them at the very same time.
I mean,
Not to mention the tax.
It goes back to what you said, it's compounding returns, right? And people don't, humans, to make a big generalization, right? We're not good at thinking in compounding terms. We're not good at thinking about exponential curves, right? We think very linearly, right? We experience things linearly mostly, right? So we kind of think like that. We're not good at comprehending the real power of exponential type of curves, right? But it's very true. And I kind of come down, I think, somewhere in the middle where, I post on Twitter a lot on, trades because I kind of enjoy that. And I see it both ways. I think you're absolutely right. The biggest payouts are the ones that, you wait for and you have conviction and you stay invested and you're not selling on the first, green bar or the fourth green bar or the ninth green bar, right? You're in it for the long haul, right? And at the same time, I think that there's room to do, to be a little more agile. And I mean, so what I do is most of my portfolio is in Celcius, right? And it's earning passive income. And, I barely check it. I'll check it on Monday to see the interest because it's fun. But, so that's the HODL stuff and a bunch of long-term assets I'm holding in there. And then I have maybe, it varies, around 30% of my portfolio that's designated for trading, right? And that's where, and that's, again, something that I've worked on. When people come to me and they say, hey, I want to, what should I buy now to make a quick profit? Or, what should I trade? I discourage them. That's the first thing I do, right? And I can, I'm not a trading expert, I mean, by any stretch, right? I put in a lot of work, and I can at least say I'm a lot better than I was. And I'm very meticulous. I track everything. So I know my ROI, and I know that, I'm doing very well. But, I don't recommend that to most people, because trading is not easy at all, right? And it's not about, can I find the right trades? It's like 99% mental discipline and execution. So what's helped me, is separating those things, right? To say, all right, I only have, X portion of my portfolio, which is more shorter term oriented, where I can be more agile, because, let's face it, crypto moves very, very fast, right? And there are projects, that go 100x, right? And if you have the time, which I do, you can look for those and try to make those plays. But like you said, and for the vast majority of people, right, all you have to do is, find those best assets. And it's not hard to find them. The market, they're on the top of coin market cap, right? The market's telling you these are the winners. This is where all the money's going. And yet, you still have people being, oh, I need to find, coin number 1500, to outperform. It's like, you really don't, right? You just have to be patient. You buy the winners, you know what they are, and you use these tools like Celcius, like Nexo, like other DeFi. If you're a little more technically savvy, right, you can use DeFi. I think for most people, just CeFi, Celcius is the way to go. The rates are still incredible, and let it do the work for you, right? And sleep easy, right? And it is so powerful. People underestimate. People are so short term oriented. I think just because society, is that way now, and it's tough. I feel it too, right? There's an incredible pull towards, instant gratification, likes, retweets, all this crap, getting it, right now. But it really doesn't take very long, with Celcius, and with these kind of, 12.5%, on stable coins, and, 6% on Bitcoin, it doesn't take that long to really start seeing some results. We're just talking, especially if you factor in, like you said, the crypto markets, performance over time, right? And yes, we go through slumps, but this is a macro trend, right? This isn't a bubble, right? This is, we're in it for many years, right? So it really doesn't, if you just have a little bit of patience and discipline, nowadays, you can do really, really well. If you have the ability to just kind of, park the, gotta get rich quick, and ignore kind of the FOMO, right? It's everywhere, right? There's always something that's gonna, be popping off, 10, 100x that you're gonna miss, and just accept that. It's fine. Most of the people, right? You see everyone sharing, that when they make a lot of money, right? The people that make a lot of money, they always share their stuff. What you don't see is the even more people that get wiped out, right? They're not on Twitter or Instagram sharing it, right? So you don't see it. But there's just as many of those people, if not more, probably more. Okay, a lot more. So, I just really don't think it takes that much, today. If you have the ability to kind of park that and be patient and say, all right, I'm going to park this stuff for 5 years, for 10 years, in Celsius. And I'm just going to let the passive income do the work. I'm going to DCA, right? I'm just going to buy, once a month. I'm going to buy, the number one, number two. Maybe I'll, I have a smaller allocation for other ones, and let them earn, it's just never been better to do that. The tools we have are superb.
No, I agree completely. My journey has given me a certain amount of confidence and information and education, and I've been free to impart it on others. I've even started an investment club on Patreon it's a lot of fun. And the truth of the matter is, every single one of us is different. We have different goals, desires, aspirations and resources. And the game here, right? If we're going to look at this as a game, the game is understanding where you are, where you want to be, and what you're willing to do to get there. And with those three components, you can craft an investment strategy that you're going to love because it's yours. It's for you.
Absolutely.
It's not Shahar's, it's not Jerry's. Right. It's the one that works for you. And by doing so, that process is educational unto itself. And it will beget more education, right? Because when human beings tend to enjoy what they're doing, they intend to do more of it.
Mm-hmm. Yeah.
You know what I mean?
Absolutely. Yeah.
And so it's been great. You and I are in the good position of having a front row seat to the rest of the world coming to this, and they're going to come to it from all different angles and different experiences and right. backgrounds,
and they bring their own stories. I think that it's very well said. I like the way you put it, and it's something that I'm glad you mentioned that, because that's a big part of my business is there's going to be a lot of stuff, but core of it is personal consultations, right? And it is based on that approach that of course everyone is different, and your goals, right, and your position, your resources, etc., inform what's the best strategy for you and what's the best allocation for you. And I totally agree. We have lots of people coming into this. We have lots of people that whether it's they saw the news yesterday that now Tesla, a company that everyone knows, has put their stamp behind it, whether it's they were on Wall Street Bets, right, buying GameStop and then got blocked by Robinhood and realized that they're playing in a rigged system firsthand, and now are coming into it, or whether it's people that are just tired of holding low yielding stocks or bonds or other types of stuff, right, that are again in search of yield, coming to it, right? Everyone has a different story, everyone has a different background, and everyone's kind of in a different place in terms of their readiness to start participating, right? And I think we, like you said, we have this role, right, of helping guide people, and that's how I see my, we're in a time of massive disruption, right? We're on that, if you look at history and the long view, we have been slowly ramping up the exponential curve in terms of technology, very slowly. Now in 2021, what a time to be alive, right? We're hitting the incline, right? And we're starting to really hit it, okay? And over the next, 30, like I have no idea what's going to happen. Like nobody knows what's going to happen, right? Because the way that technology compounds, right, is you have different technology, different technological advances in different areas that start to affect each other in ways that nobody could have thought. Like what is Bitcoin, right? Bitcoin is a combination of economics, game theory, technology, distributed computing, cryptography, right? All of these different disciplines. You couldn't have seen that coming, right? And like that, right? That's what drives, this exponential curve. Point being, right? We're on this massive, disruptive journey, right, into the future together. And, I see my role as just trying to help guide people for this one piece of disruption, financial disruption, trying to help them understand how to navigate that and use, the most modern tools, right, be on that front edge of that curve to take advantage and reach their goals. And it's exciting times, and I'm excited, for all the people coming in. I do think, where we are in the market cycle, it still looks very good. It's very young, we have a long road ahead of us. I don't know, if that'll still be the case, at the end of the year or next year, if we see something similar to what happened, we know, I think now what to look for when things start to get a little frothy, bubbly, when you go into a hairdresser and everyone's talking about it, or when, you get calls from people that you've never heard from, for 20 years. asking you about it, you can start to wonder a little bit. But I don't think we're there. I think we still have a long cycle ahead of us. That's my opinion.
Well, I see what you're saying, and I see where that definitely applied to the real nascency of the market back in 16, 17, early 18. Here's how I see it. I see there's two markets here. And it's just my opinion, but it's an observation that I'm very confident in. And that is, there's two markets within this digital asset space. There's Bitcoin, and there is the rest of the digital asset space. And the reason I say that is, with the likes of the MicroStrategies and the Teslas and the Mass Mutuals and Harvard and Yale, and the list goes on and on and on, the de-risking of Bitcoin as a gold reserve asset alternative, the case is made, the genie's out of the bottle, and it will perform like other reserve assets before it. Because of its limited supply, we have network effects that are going to come into play that are unprecedented to any other previous network effect tracking or projecting type of schedules, because each new person that comes on with a completely different wallet, right? I came on with my tiny little wallet. I'm one guy. Elon Musk and Tesla comes on. They're just one entity, completely different effect on the network, right? So the thing you and I both have learned is that liquidity begets liquidity, right? The larger the market cap gets, the more attractive it gets. Well, there's a couple $100 trillion of addressable capital, addressable market looking for security, looking for yield, looking for the preservation of purchasing power, the preservation of wealth, the preservation of shareholder value. I don't see that with coins number 2 through 5,600, but it's definitely there for Bitcoin. So we will see, but I think there's the safe bet in crypto, and then there are speculative plays. And I think Bitcoin's the safe bet, and everything else is a speculative play, and they have degrees of speculation, and it'll be really interesting to see how it plays out. But I honestly think the big 80% corrections, I don't think we'll ever see that in Bitcoin again. There's too many large hodlers for that to occur in this system.
So maybe right now, I mean, I agree with you that Bitcoin has definitely been de-risked, and it will continue to be de-risked. I think Ethereum has also been, I think Ethereum is kind of on the same trajectory, just a lot earlier. But there's still, you're right about all of that, but there is still a portion of Bitcoin's valuation and of the market for Bitcoin that is very speculative and speculative driven. Whether or not it's been de-risked, there's still, a large amount of speculators, and there may not be now, but what you get when you get the 80% correction, right? It's a function of too many speculators have come into the market, and they're kind of weak-handed, and they're not, it's driven up the price to kind of beyond its fundamental valuation, and so you need to kind of wash those guys out to get back to there will be the whole. Okay, so the hodler base, right, is what kind of holds Bitcoin up. So when we had the crash back in March, when we had the crash back in I think it was November 2018, when we went down to, we found that base each time. It was about $3,000 or so, and it was maybe a little bit higher. So that's where the hodler base is, and now it's certainly much higher, right? But that's where we found that, right? And I think there will be a time when we have to find it again. That's just how market cycles work, right? And now where it is, right, and where it corrects from, right? Whether it corrects from, 50,000 or 100,000, or whether it corrects from a million, right? If it corrects 80% from a million, we're still talking about a floor of, 200 grand, which is well above, where we are now. So it's not, point I'm making there is that it's not much use speculating, where that's going to happen and then trying to time it, because you don't know where it's going to happen from. But, it's, I have to say, I don't think this time it's different, right? We're still in a market, right? Human psychology is still at play. FOMO is still going to be at play. And there will be a time when, there's some massive surge and we get to a place in the cycle, right, where there are too many speculators. There are too many people kind of not in it for the right reason, right? And then we have to, go back down and find, that fundamental place where, where it's the people are the right people are in it, right? And then we can keep going up and we can start to, restart the cycle a little bit. But I do think that'll play out. And I mean, and when, I don't know. I do think I've heard arguments that, the typical Bitcoin and by extension kind of crypto, market cycles around 4 years. I've heard, some convincing arguments to say, all right, this time it's going to be longer than that. We're going to have kind of a longer way to go before we hit the top of the cycle, because, there are more participants, there's more institutions, there's more, quote unquote, smart money, or, people with deep pockets. So I don't know, I don't know what that will look like. But I think it's something to be cognizant of. And if you're a really long-term investor, right, then it shouldn't really matter to you, right? It doesn't matter. If you're a really long-term investor, you're DCAing, then your eye is on, 15, 20 years down the line, so 4 or 5 market cycles from now, or whenever your, retirement date might be, or whenever whenever that might be for you, right? So you don't have to really care about that. It's something that, those of us that are more active in the market, and for people that, want to be more active in the market, like to think about. But yeah, I think that, that's all I would say. We're going to go through, the market cycles, but you keep your eye on the prize, and you keep your mind, on the investment thesis, right? The macro trends, right? If those are in place, then we have nothing to worry about, or it's something much bigger than just a single market cycle.
Absolutely. Absolutely. Well, this has been a really wonderful conversation, and I'm glad that we were able to both coordinate the schedules to make it happen. I am, of course, not going to miss the opportunity to give you an open invite to my Friday night live stream show that I do, where we get investors from all over the world tuning in and asking questions. And we always have a good, we'll create a good topic. And if it's something that you might be interested, I do them every Friday night, 9 p.m. Eastern time, 6 p.m. Pacific. I've got the next week lined up, and then a week after that. But I think it's the 19th. Anyway, we can work out details later if you're open to it. But I want to thank you, Shahar, so much for taking the time. Folks, you can find him on Twitter. His Twitter handle will be in the description of the video below. I look forward to seeing big things from you, young man. I think you're doing great work, and I'm really glad that we got to connect. Folks, thanks for tuning in to another one-on-one with Jerry Hall. And until next time, Pura Vida.
Pura Vida, Jerry. Thank you so much.
Right on.